For top professionals, there's a huge blind spot in most financial plans. Seriously, it's a gap that can put everything you've worked for at risk. So today, we're going to look at a special type of insurance that's designed to close that gap and protect your single most valuable asset. So let me just ask you a question right off the bat. What is your single most valuable financial asset? I mean, really think about it. Is it your house, your investment portfolio, your 401k? Honestly, most people get this one wrong. And the answer, for pretty much everyone, is this. It's your ability to earn an income. Every other piece of your financial life, your savings, your investments, your entire lifestyle, it's all built on that foundation, on your paycheck. And without it, that whole structure could be in real trouble. See, your income isn't just cash flow. It's the engine that drives your entire financial world. And an asset like that, well, it needs some serious protection. But here's the thing. For high earners, the standard protection just doesn't cut it. There's this massive gap in the safety net, almost like an insurance black hole that can leave you way more exposed than you think. Now, a lot of companies offer a group long-term disability plan, or LTD. And don't get me wrong, those are a great starting point, but they have one critical flaw for top earners, a cap on how much they'll actually pay out each month. Just look at this. On the left, that's a high monthly income. But on the right, that's the maximum payout from a typical group plan. That huge gap, that chasm between the two, could mean a total collapse of your lifestyle if you suddenly couldn't work. And the problem goes way beyond just that benefit cap. Standard LTD plans, they often only cover your base salary. That means your bonuses, your commissions, and for business partners, your K1 income. Yeah, a lot of that often isn't insured at all. So that gap we just saw, it can actually be even wider than you think. So what's the fix? How do you protect that huge chunk of your income that the standard plans just leave on the table? Well, that's where this very specific type of plan comes into play, designed to do one thing: bridge that gap. It's called guaranteed issue disability insurance. Now, the magic words here are without individual medical underwriting. What that means is, for a qualifying group of 3 or more people, the insurance company agrees to issue policies with no medical exams, no deep dive into your health history. It just makes getting coverage so much simpler and easier. Now, to be clear, this is not a replacement for your existing group plan. Think of it as a supplement. It's designed to sit right on top of your traditional coverage and fill in the exact holes we've been talking about. Okay, so let's get into the nitty-gritty. How does this actually fit into a real, comprehensive income protection strategy? The best way to think about it is with a tiered approach, like a pyramid. Your base layer is your company's group LTD plan. The middle layer might be a private individual policy you buy, but that top layer, the one that gets you from a capped benefit all the way up to protecting 65 or even 75% of your total income, that's the guaranteed issue excess policy. It's what completes the structure. And companies can offer these plans in a few different ways. A mandatory plan is one the firm just provides for everyone, say all its partners. A voluntary plan is offered to a group and people can choose to opt in. And then you have a hybrid model, which gives everyone a base level of coverage and the option to buy more on top of that. So, what really makes these policies so powerful? Let's take a quick look inside and check out some of the key features. First, just the sheer scale. These plans can have issue limits of over $100,000 a month per person. They are literally built from the ground up to protect very, very significant incomes. Now, this next one is maybe the single most important feature. It's called own occupation coverage. It means the policy pays out if you can't do the duties of your specific job. So if you're a neurosurgeon and you injure your hand and can't operate anymore, you are considered disabled. Even if you could go teach at a university, it protects your unique, hard-earned specialty. Another really powerful feature is a residual benefit rider. Because look, disability isn't always an all-or-nothing thing, right? This rider kicks in and provides partial benefits if an injury or illness just reduces your ability to work and you take an income hit because of it, even if you're still working part-time. It gives you a ton of flexibility for all sorts of different scenarios. So all of this brings us back to that one final question. When your most valuable asset is your ability to earn a huge income, an income that's built on years and years of specialized training and expertise, is the standard protection from a basic plan really enough? That's a critical question every top professional really needs to think about.